So what are the income streams? Well, for the investor, you'd have the income streams are the revenue, the ongoing revenue from the property, which would be interest income, the rental, the taxes, insurance is a wash. So you have the interest income. Then ordinarily they would get some sort of revenue bonus. They would get the first X amount of dollars, and then they would get a bonus based on performance. Then there's also the profit at sale, which I would call the equity bonus. When the house sells, ordinarily there's some sort of split between the pool and the investors. Like in our pool, something that I think is kind of conservative is you split stuff 50-50. The preferred cap rate for us would say be something like 10%. So whoever puts the money up gets the first 10%. Then there might be a little management fee charge after that, and then cash flow could be split, negotiable, but say 50-50 on the cash flow on the sale and cash flow on the any extra interest income above the 10%. The interest income on this particular pool, and again this is speculative, but basically the total interest income would be about $32,480. That's 8% on that $408,000 land contract. We charge a management fee of say 5%, so that would be, again, year one, $1,624 goes to a management company to collect the payments and do the paperwork. So there's roughly $30,856. In this particular pool, it's structured that the investor gets the first 10%, so on $250,000, the math's easy, it's $25,000. And then that extra $5,000 or $6,000 is split 50-50, so there's a $2,900 bonus to each management and the people putting the money up. So the yield, the running yield's about 11.17%. Now you got your profit at sale. Roughly it's about $22,000 a house. We're putting in year one, nobody pays you off. So they're really, the balance is still $250. When we put one house selling each year, and this can be all over the board. I mean, this is it's going to be hard to pin down. If there's more houses that sell, that's phenomenal because there's huge profits. Obviously, you see 22 grand profit every time somebody pays you off. So we're saying one a year, so roughly about 14% of the portfolio gets paid off. So then the people get their capital repayment of $35,000 plus an $11,000 bonus on average per property. So the summary on the annual income, like in year one, there's no sales, so it's no money on the sales, but they get their $27,000 in interest income. So that again leads a yield of about 11.17%. And then we're saying each year after that, one house sells, so you can see it goes to 16%, 17, 18, 21, and that's because that pool balance is being, radically reduced with each payment. Now, what are the management income streams? The management company has acquisition fees, and those are just to go out and find properties. Usually people charge anywhere from $2,000 to $10,000 to find a property, or it might even just be a flat fee. Then there's purchase commissions. A lot of these houses are sold by banks and things, and those banks will pay a commission. So if we have a brokerage, that's ordinarily about 3% that they pay back. Management fees are the running fees going on. It could be a flat fee or a percentage. I think we put in ours that it's 5%, which is low. Flat fees could be anywhere from $25 to $100 per property. Then the management also gets the interest bonus. That's that extra revenue participation, and also gets the sales bonus at the time of sale. So there's basically 5 income streams. It's a little summary of what the management company could possibly expect. Year one is big for the company because there's the acquisition fees, which we put at say $2,000 each, which is conservative. 7 houses, $14,000. Management fees, $1,624. That's 5%. revenue participation as a bonus. And then the down payments we get, we could theoretically keep that or go towards commissions. Then you have your purchase commissions, which is at 3% when you buy a portfolio. So a portfolio like this could roughly generate about $31,000 in fees in year one. After year one, it drops. Um, After year one, you're really just looking at your little management fee, your revenue participation, and then the big thing is the equity as each one of these sells, which would be about $11,000 on average. So this pool in general could possibly generate over $80,000 over 5 years.